US market update January 14, and we're looking at the chart of the SPY to begin with, and we can see that the SPY opened up and did make an attempt to take out the 50-day moving average, only to fall way back down and then sort of form a large sort of outside day. Now, an outside day, what does it mean? Well, it means a lot of indecision. It means a lot of people not really sure what to do, and so there's been buying, there's been selling. At the end of the day, a non-trending day. So what we'd be looking for the bulls, of course, is to take out the top of this outside day to give some cheer, which would also take us above the 50-day moving average. To the downside, well, what the bears would be looking for is a breach of this outside day and potentially going down and challenging this previous low here. So overall, not much to say except it's a wait and see kind of game. See if we can breach the top or the bottom of this for the next direction. And that's going to be pretty much the same thing across the board. Looking at the diamonds here, the diamonds closed below the 50-day moving average for the second day, which indicates a slightly less positive phase of the market. Once again, we're looking to breach the top of this period here. We can see this has provided some sort of a ceiling for the past week or so. So any move above that 179 area would be encouraging. Once again, if we're looking down here, breach of the 174.75 takes us down into this territory here, where our next line of support is 172.30. As long as we're making these higher highs and higher lows, we're still mildly positive on the diamonds. Clearly, there's some uncertainty in the markets around the various things that are going on. Qs also had an outside day, so more of the same. Big outside day on the IWM. The one difference is that we closed above the 50-day moving average, so a slightly more positive slant to this. Overall, the 50-day moving average is sloping upwards, and so we could say that the IWM chart's looking a little bit more positive than the others. Checking out GLD, and we can see here that very briefly did we break above that previous high, only to fall below. A break above that 119 might be a positive sign. So if the indices continue to go down, we'll probably see some inverse correlation with the GLD trust, and it will probably make a move upwards towards that 200-day moving average or beyond. Going over to USO, let's see what's happening on the oil front, and we can see here that USO, well, it had a little up day. Close towards the top, no real, there's a bit of volume behind it as well, there we can see. So we'd like to say that it's calling a bottom, but we've seen it, put in a floor for a little while and drop through it. It's seen it put a floor in for a little while, then drop through it. So really, until we see a fairly substantial amount of volume and a few upticks, we certainly would not be wanting to put any money into USO as a long. On the downside, well, looking at these continued slides, maybe bear call spreads might be the order of the day on USO. US market update. Thanks for watching.